Should investors buy Microsoft stock at current valuations? Well, that's the question I'm going to answer in this video, looking at its revenue, its profit, its cash flow, and then comparing that to its valuation to answer if investors should buy the stock. So let's jump right in, starting with revenue, and you can see clearly the trend is upward for Microsoft stock. 211 billion in revenue in the most recent year. That's up from around 80 billion in 2014. And of course, it's been well publicized how Microsoft is infusing its products with artificial intelligence. So it's going to benefit from the increasing effectiveness of AI. Growth prospects look solid for Microsoft stock over the next several years. Additionally, the company is generating lucrative profitability from those revenue, looking at operating income of around 30 billion in 2014. That has almost tripled to 88 billion in the most recent 12 months. The company's products and services are profitable. They've got strong competitive advantages, and it's going to be difficult for any competitor to encroach on its core business prospects. And so, for that reason, I think with Microsoft's revenue forecasts, revenue prospects, its profit is also going to look very nice as well. I also wanted to look at cash flow from operations to see that, operating income is leading to cash flow from operations and there is no mismatch between the two. And we do see that 87.58 billion in cash flow from operations, very close to the 88 billion in operating income. And that should be the case for large mature companies like Microsoft that are well established, and so they're not using a disproportionate amount of stock-based compensation or have a disproportionate amount of non-cash expenses. So good to see that there's confirmation between cash flow from operations and its operating income. And finally, I wanted to weigh those prospects against its valuation, because it's one thing to look at a company that has excellent prospects and then you look at the valuation and you're like, yeah, that's really awesome, but it's a really expensive price, right? It's like going to shop for a car. Of course, the Mercedes-Benz or the BMW luxury model selling at $100,000 is going to be nicer than the Honda Accord selling at $25,000. But is it worth the extra $75,000 to upgrade for those features? That's the question you got to ask sometimes when investing in stocks. Sure, there are some companies that are growing robustly. They've got phenomenal prospects. They're generating excellent profit margins, great competitive advantages, and et cetera, et cetera. But then you look at the valuation and it's trading at super expensive valuations, and you're just like, yeah, it's a great company, I agree, but I'm not willing to pay that premium exorbitant price. And the good news for investors is that Microsoft stock is an excellent company, generating solid revenue growth, generating excellent profitability, phenomenal cash flow from operations. And on top of all that, it's not very expensive. It's trading at, in my opinion, a fair valuation, a forward price to earnings of 25. It's about the average price it has sold for. If you go back, according to this metric, 3 years, it's been higher, sure, at 36, and it's been lower, close to 19. But 25 is right about the average it has traded for, according to this metric. And given that AI is giving Microsoft solid prospects, better than the previous era, prospects for the next few years, I like paying this price for Microsoft stock. So yes, I would say that at current valuations, investors can buy Microsoft stock and feel good about adding it to their portfolios.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.